four distinguished panelists with us and two interveners, very distinguished interveners. So let me introduce you to the panel. We have, of course, Mr. Sunny from Deloitte, very well-known face. He doesn't need introduction, in fact, So I am not going, at length talking about him because he is a familiar face, and all of us know that most of the people in the audience will know about him. Then we have, of course, Mr. Santakumar Burma. Of course, he is a CFO from Luminous Power Technologies, another very known face so far as TIL and Mr. Burma is concerned. In fact, we go hand in hand. And then we have Mr. Yatrik today, very distinguished, and he's the group CFO of NSC. NSC, all of us are familiar. Our heartbeats start going up and down. When the things move on the NSC and the BSC. So we have Mr. Yatrik. Welcome, sir. And then, of course, we have Mr. C. Gupta, of course, he's a subject matter expert, and two interveners. We have Mr. Rajnish Kumar, the former Chief Commissioner of Income Tax, and Mr. R. Siddhar, of course, another very familiar face. Anybody who knows TIL will know Mr. Siddhar. So I need not introduce him in details. And before I roll the dice, and talk about or probably facilitate you to talk about, the meat and the bones of the various provisions of the budget. Let me also probably, request each of the speakers to give you some kind of, take a leisurely walk and give you some kind of initial observations about various announcements made in the budget before we switch over to the little tricky zones of, the technical amendments in the taxation provisions. So let me start with Mr. Yatrik. So welcome, and let me start with you, sir. Naturally, you should be a little more delighted than others, perhaps because yesterday, immediately after the budget, the Sensex was actually, interestingly, it started jumping skyward. So maybe, sir, you're the right person to give us some kind of input, some insight about how exactly you look at the budget and what are the initial takes from your side, sir?
At the outset, thank you, Shailendra, for that introduction. And also, I delighted and privileged to be part of this particular forum when I have distinguished other panel members. And welcome all of them. And thank you for the opportunity given. And also, thank you to all the listeners and viewers for the day for giving me this opportunity and share my views. As you rightly observed, that the budget for this time actually, it lacked the nice gift wrapping, but there are a lot of good things surrounding this budget, especially the way I look at this budget is this is the first time that I could see any budget speech or budget provisions which has slightly more than 1 or 2 years of view. Large part of the provisions, large part of announcement, large part of budgetary proposals are there which are going to have a long-term, far-reaching positive implications both for the economy as well as for the individuals as well as for the industry. And somewhere the Honorable Finance Minister actually announced 25 years as the planning horizon. I think that indicates that the view over how the growth and reforms need to be done in the country is not restricted to 1 year or 3 years, but it is long-term, and it has to have that depth in terms of its reforms. Having said that, the whole budget, as most of us we know, is largely focused surrounding the growth. And probably this is a very different way of having that growth impetus in the economy, whereby government is taking that first step of creating some sort of a climate, both in terms of some of the budgetary announcement, facilitations, whether it is SEZ or IFSC gift, or continuing with some of the SOPs for the industry in terms of the investments, etc. But the most important step the government is wanting to do is that they want to start and investing and spending. So just merely increasing from 5.5 lakh crore to 7.5 lakh crore is an indication that government is taking that first step. And that is what is going to expectedly kickstart the private investments to come forth. All the earlier budgets, all the other thinking that we thus far used to have was we were relying on the private industries and players to come forward and do the investment. So this is another change that I could see. The third important part that I could see is that government is also focused on green energy, infrastructure building, and something which are slightly forward-looking kind of areas and initiatives, and that indicates that government is having some sort of focus on these particular aspects. Talking specifically about capital market, while there has not been so very many significant announcements specifically for financial markets and capital markets directly, but indirectly by giving some of the announcements in the areas of IFSC Gift City, because that is another upcoming center, and a lot of institutions, including exchanges, depositories, banks, are already present in that particular jurisdiction. And I think government is clearly focused on how to develop that as a true international financial center. And I just wanted to share with the listeners and viewers and also with the panel members that if you would have just imagined 10 years back, which was in our Asian or South Asian jurisdiction, which was considered to be the financial center of Asia, it was Singapore. And the indication and this gift city, the way government is wanting to shape it up, looks like that next 10 years or 20 years, when people will think of Asia and the financial center of Asia, I think it's going to be the gift city. All the policy provisions, all the budgetary announcements, as well as day-to-day actions and initiatives from the government are clearly indicating that that is the center we want to develop. And my expectation is that some of the tax ops that are continuing in the IFSC also so as there are some announcements with regard to the startups in that particular area, including the derivatives, because any foreign NRI who comes and takes positions into derivatives in that jurisdiction, any profits made out of that particular derivatives will be tax-free. Now, this is a very, very significant development, because by doing this announcement, we are not looking at having participants who are only Indian nationals, but anybody who is an NRI, meaning somebody who is a foreign national, need not be a person of Indian origin, need not be a PIO, but even she or he also can come and participate through that. And that means the whole focus is to shift the entire foreign participation to this jurisdiction and make it completely tax-free. I think that's a very, very significant area and bold step that the government has taken. The other part is obviously in terms of divestment. So while the divestment target till December are not what was there in the original estimate, and as I could put some statistics, the revised estimates of current FY22 is somewhere around about 80 or 90,000 crore. But still, the original target is significantly high. That means the LIC IPO, which is much talked about and much contemplated, is there to happen before March 2022. And that will bring some sort of further impetus to the capital market. Also, my thinking is the next financial year, some of the other PSUs in the name of maybe a BPCL or Shipping Corporation or BEML, right? Or maybe Pawan Hans. These are some of the candidates which might come for IPO in the next year. Government is making a very right balance of where they want to participate as the public sector enterprises, which are the sectors and which are the areas they want to now hand over to the public and to the private sector, so that they are freed from those moderation of running the corporation, but doing the real development work. There would be some intermittent inflationary pressure which will continue, because one is government will go ahead and do the borrowings. So that will take up the overall interest rates. Interest rates have gone up in last 2, 3, 4 months. And while we may have to live with that inflation, to my very individual understanding, for next 1.5 years. But if the inflation is backed and side by side is along with the growth, the traditional multiplier effect of that economic cycle comes, it will also generate that additional household income. So additional income with little bit of inflation is much better than having something called as stagflation. That is, the economy is stagnated. There is inflation or there is deflation. So I think we are into some positive direction. While at micro level, we may not find things changing so much, but I think this budget was more to look at the overall picture of the country and the macroeconomics and had limited to do with the micro parts of it. So this is what my take is. Taxation, yes, as you rightly said, individuals have got disappointed, but I'm sure my other colleagues on the panel will elaborate on that. Why part of the taxation, that why taxation could not get tinkered. One important thing is that from capital market side, I'm not too sure, some of us, we had a chance to look at the total collection of STT, Securities Transaction Tax, is somewhere northwards of 20,000 crore in current financial year. And all that is thanks to the way the markets are actually moving. And if right kind of policy and economic climate persist, I think Indian markets are stable and will continue to be stable, and it will grow. And that only will help government to garner some more additional tax in the form of STT, and that will help further giving some this thing funding, financing support to the various other initiatives. So these are my short observations and comments about it. Climatically, it is a well-managed climate. One thing is nothing major came, but the other part is there is nothing which is so significantly disruptive and damaging. Both needs to be looked at when you look at the budget and the markets. So that's what my thinking is. Over to you, Shailendra.
Thank you, sir. Thank you. Wonderful, sir. I mean, you have already contributed 20,000 crore and did not get much, but not disappointed. That should be the spirit of a taxpayer. That is what probably, the finance minister is looking at. And she was very thankful, for contributing hugely, particularly in the indirect tax side. Even direct tax side, in fact, the collections have picked up, significantly, in fact, sir. And you rightly said, sir, this macro environment and macro framework are quite healthy. Most of the indicators are pleasantly, encouraging for most of the private investment and the gift city. So let me go back to, sir, Mr. Mani, maybe you could give us, a different perspective of the whole budget. So, over to you.
Thank you, Shailendra ji. So the way I look at it is, after the opening round, which Mr. Win, he spoke with so much energy and conviction. I'm struggling to match his energy and conviction when I speak of something to do with, tax. Broadly, I will say that from an indirect tax perspective, there are a few things that were very, very good, and there are a few things that we have to be very, very cautious about. So the good side of it is the fact that the customs duty rationalization that we have been seeing year on year, every year. Now, there will be some people who will use the term tinkering with the customs duty rate. I don't consider it to be tinkering, because the way I look at it is, import of products and components into the country and the rate at which they have taxed have to be a dynamic exercise, because the country's requirements of goods and services today in 2022 is not what it was in 2012. It is not even what it was in 2017. So in 5 years, possibly the economy has developed by more than 10 years. And therefore, the list of products on which customs duty is imposed at certain rates needs to be revised at regular intervals. We have to see changes in that depending on the changes in the country's economic climate. Two changes to me that stood out in respect of the customs related changes. We can discuss the GST related changes a little later, but two changes that stood out to me. One was the fact that there is now even a focus on making the country a manufacturing hub for wearables. So whether it is a smartwatch, whether it is an AirPod, whether it is any other wearable by whatever name, we now want to make the country a manufacturer of wearables, which indicates to me the size of that market and the thought process of the government. So what they have done is that in respect of wearables, the customs duty on components has been brought down to nil from 1st April 22. And as part of a phased manufacturing plan, this customs duty on components will go up over a period of time. However, the customs duty on the finished product imported in the country will be 20%. So for the next year or two, it is a wonderful period for manufacturers of wearables in the country, and we should see a lot of them. Some of them who have started a little ahead, I have been reading that they are planning to go in for an IPO. So some names we all would have heard in recent times. But we will see much more action in that, which again will correlate to some kind of stock market impact, which Mr. Win was mentioning. Because the more number of companies we have, the more the taxable profits, the more the market will also recognize that. The second aspect is the fact that the tax authorities or the CBIC continues to keep reviewing decisions taken by various Supreme Courts and High Courts, and they seem to be finding out ways and measures of overcoming some of the decisions. So sometime back we had a decision in case of Canon, where the Supreme Court had said that DRI officials do not have jurisdiction to do certain activities and go on recovery notices. So they have sought to overcome that, but they have sought to overcome that on a retrospective basis. So that again, to my mind, is going to open the floodgates for a lot of litigation, because for quite some time, especially during the last 2 years of the pandemic, we have seen a lot of litigation in customs where people have gone to the high courts and tribunals, relied on the Canon decision, and have been able to get relief from there. Now, would those cases be opened? Is a big area. There is certainly a focus on streamlining customs procedures to make it easy for importers in India. That process continues now, and also make it easy for exporters from India, because all of those finally will translate into better rankings from ease of doing business as well. So from a customs perspective, I was very happy to see what I was seeing, and I would not be among the set of people who will prefer using the word tinkering. I would prefer using the terminology rationalization of customs duties needs to be done, and the duties need to be reset every year depending on the requirements of the country at that point of time.
Right, sir. Perfect, sir. I agree with you. What you are saying is that rationalization, good number of people construe the same as raising the protectionist wall. So maybe we will touch that issue, sir. In fact, let me go to Mr. Sant Kumar Burma. Santji, in fact, how do you look at the budget? From the industry perspective, maybe you could share your thought.
Thank you, Shailendra, and good afternoon to all the listeners. See, very broadly, I think Mr. Yatrik simplified my job also. While outlining what it lays down, I think the big investment on the infrastructure, I really see that as a really big bang. 35% more allocation is a big deal. And I heard people yesterday talking about that there's nothing specific on employment, etc. But when you invest 10.7 lakh crore, I would assume that there would be 20-30% component of labor also sitting inside, which will generate employment. So while this is the expenditure committed by government, there's also the income of the, on the other side, somebody is going to earn this. It's a big amount of money. And since this is all, it sits at the pedestal, at the foundation of the economy building, it will have a tremendous multiplier effect in various segments. We saw yesterday steel and cement companies stock price and many other infrastructure companies, including L&T, stock prices really jacking up. So I think that's really big. And on this, government is very serious. And we have seen this consistently happening for the last couple of years. I think they earmark amount and they really invested, and they very efficiently are investing, whether it's roads, railways, ports, and so on and so forth. I think their efficiency in investment is really very good. I think that's we must compliment government for that. The other broad comment I have is that there is nothing surprising here. You see consistency being maintained. So you don't have a surprise element in the budget. So maybe that's the reason, Shailendra, you said there's no nice packaging. Maybe you also meant that there is nothing for the individuals and salaried class in that sense. So I think in the larger context of the growth of the economy and the lower middle class and those who need to be supported, whether through NREGA allocation or through the free the pipeline and tap water connectivity and free housing and all of that, I think salaried class can maybe to some extent sacrifice for the their brothers and sisters on the other side. So I'm particularly not. I have no complaints on this. The other 2-3 comments I have is that I think many entrepreneurs miss the window of startup entry threshold timeline and the new manufacturing entry timeline because of COVID and all of that. So COVID got extended almost for 2 years. So I think Government of India extending 2 years timeline for startup and 1 year more for new manufacturing is a good welcome step. It will allow those who are planning to enter and then enjoy the tax benefit. So I think that's a good one. The overall thrust on green energy, and I think we see it that there is a tremendous thrust. There were no additional allocation for PLI as we speak. I think 14 industries under PLI, almost $28 billion committed during the scheme period of those industries, those PLIs. This is a massive commitment, and I particularly like that on the EV battery side, the swapping policy which is going to come in. I think that's a very pragmatic approach being followed by the government. So I think that's very, very good. If I now quickly turn on the tax side, I know what Mani mentioned, and going back on what government said on the floor of the House, otherwise also that there won't be retrospective amendments. And this one, which is canon, I think there were, I think Mani would know better than me, there are good dozens of cases, maybe hundreds of cases. I think most of the cases were put in the call book, across the country. And everybody was watching what's happening here. And I somehow had this, and Sheetal and me have discussed this many a times, that you get a great decision. After 3 years down the line, you need to put that in the dustbin. So all those decisions, those we have got, it's all going to the dustbin now. And I think we should avoid. I think government should avoid all of this. And if there is a provision, everybody, acted based on that. You can't now turn the clock and say that no, now the rules of games are changed retrospectively and we will recover from you. I think it's best avoidable. One or two comments I have on the GST side. I understand there is a condition cast on the receiver of the goods that unless supplier pays, you can't take credit. Now I find this again getting into a funny zone. And I again recall debating, and Shailendra, we discussed this in a couple of other forums in past, in excise days and then beyond. I think since there is a robust system of filing your return, there's no point, and I don't find this logical to put unnecessary burden and onus on the recipient of the goods. As long as in any case, as long as auto matching is happening, it's already restricted up to that now. You can take credit only once it matches. We should stay there. We should not further say that no, you also ensure that your vendor pays the tax. I think that's taking it too far in my views. That's my reading of the provision. Maybe Mani can explain this further. The other thing which I liked on the direct tax side is the two more initiatives. One is this revised return, extended 2 years window. I think this is maybe a step towards further reducing the litigation. And if somebody finds that either willingly or omission, commission, whichever way you look at it, there is a mistake, you have a longer window to correct. And so I think that's a good one. And there was one more I wanted to quickly highlight, was on some of the repetitive litigation pending before higher forums. I think HC, High Court and Supreme Court. Department will not take them further, and I think that there will be some mechanism to kind of deal with that, to avoid unnecessary litigation. So I think that's again a good one. And I was also I was trying to connect the dots, Shailendra. I recall in 2014 and beyond, we had this 2-3 rounds of discussion on TARC report of Dr. Parthasarathi Soam.
Right.
In 8 years, when we look back and see the journey, especially under this government, I think 50-60% of that journey has been covered in stages, in terms of simplification, in terms of making those administrative changes on the tax side. So I think that's really encouraging. So we see consistency. There is a roadmap they have picked up, and thrust on digitization. I think this is immense. This is unthinkable that this government is kind of traveling that path. Is really is very, very encouraging. So I think these are my comments. Thank you so much.
Thank you, Sanjeev. Thank you. You rightly put it. The individuals have been on the boil. Actually, they were expecting more. They were expecting that more money in hand, and perhaps even the opposition had the same kind of expectation. That more money should be in the hand of the consumers, so that it could give it could spur the demand in the market, perhaps. But it did not happen because naturally the government, as you rightly put it, that consistently following a different path where the impetus is more towards it's geared towards the infrastructure, etc. And infrastructure infrastructure, including the digital side and of course the gift city. So let me go to Mr. C. Gupta. Of course, we will come back to Sanjay. In fact, all the panelists, we will go deeper into this. For instance, updated return, for instance, Canon, for instance, we will also look at some of those virtual assets, which were actually, making waves, like Omicron in the economy. So we will talk about that also. So Mr. Gupta, maybe we would like to have your initial observations.
Sure. Thank you, Shantaji, once again, and good afternoon, everybody. So from a direct tax perspective, I think the 5 pillars of the direct tax proposals which the finance minister has laid out, and as he mentioned in the budget speech, I think the first one is stability and predictable tax regime. And I think that is why we see no changes in the tax rates, apart from capping the long-term capital gains at 15% for everybody across the board. There is no change in tax rates for individuals and corporates both. Now, for individuals, one can understand, of course, there was an expectation, but maybe in the context of stability and predictive tax regime, no changes have been made. The second one, of course, will be with respect to trustworthy tax regime. And that is where you have the introduction of no retrospective amendments in that sense. There is one in the context of 42, but largely there have been no retrospective amendments. If you recollect, there was the Supreme Court judgment in last year on the taxation of software royalty. And there was an apprehension whether the government will do a retrospective amendment on that in some way or the other to overcome the treaty benefits as well. So that's not happened. The second one was with respect to the various reassessment notices that were issued after April 21 and before 30th June 21, where all the matters are pending before the high courts, and it has also gone to the Supreme Court. And again, there was an apprehension whether the government will do anything in the budget. So there has been no changes on that count as well. The third one is in the context of simplified tax system, where you have the faceless assessment scheme. Now, of course, has been entirely revamped. So that one will need to see how that will work out, but that's towards a simplified tax system. The fourth one is again promoting voluntary compliance, which Mr. Verma referred to in the context of updated tax return. And that's an expectation that if you have missed out anything, you have an option to file an updated tax return, pay the additional tax of 25%, 50%, and then you are done with it. So that's promoting a voluntary tax compliance. And the last one is in the context of litigation management, again, as Mr. Verma referred to, repeated litigation. To avoid that, if the matters is pending before the jurisdictional high court or the Supreme Court, then the commissioners and the tax officers can decide not to file an appeal in that. I do have some issues surrounding that because it requires the SSC to agree to that. Now, how many of the SSCs will also agree? So one will need to see the practicality of that. But overall, I think these were the 5 planks on which the direct tax proposals which the finance minister had laid out. And also, I think they also borne in mind some developments which are happening, like the crypto assets in that sense. So they have tried to make changes on that front as well. And one innocuous change, I think, which perhaps may not have been seen by many, is on the reporting by the various OTT platforms. Now, they are required to make a lot of reporting. Earlier, it was only limited to production of cinematograph films, but now all the OTT platforms, the event management, and all organizing those events are required to make a compliance and a reporting. So that's a compliance burden which has got added. But at the same time, I think there are 3-4 areas where one was looking at. For example, in the context of ease of doing business, we know the equalization levy was levied a couple of years back, and there are some clarifications need to be given in the context of interplay between equalization levy and royalty, technical services, the significant economic presence. So that has not come about in the budget. And the other one was with respect to the roadmap from a forward-looking perspective. We have this pillar 1, pillar 2 approach, which the OECD is looking at. Some comments or some thought process on that in the budget would have been very good as to what is India looking at and how to implement the pillar 1, pillar 2 approach. What is India's thinking surrounding that? And lastly, I think, again, going back to the relaxation for individuals, certainly that was something which was expected both from the slab rates or standard deduction perspective. And also, I know this has been discussed earlier by the government in the context of those individuals who have been stranded in India over the last 2 years, and they have not got any relief. And I know government did issue a circular saying that if you have any issues, you complete the form. But I think there was no feedback which has come on that, and that has impacted a lot of individuals, particularly from the Gulf countries. And given in the context of the amendment made in the Finance Act 20 on the stateless person, that has impacted significantly all individuals who have stuck in India. So some relief to that extent, I think, was expected, which has not come by. So all in all, as I said, I think the plank is right in the sense these are stability, predictable, trustworthy, and all that. But something could certainly have been done from the overall individual perspective.
Thank you, Mr. Gupta, for giving us, very nicely encapsulated piece, on the direct tax side. And let me inform you that, regarding this international taxation, a lot of changes which you were expecting related to Pillar 1, Pillar 2, equalization, levy, etc., did not come because, after this finalization of the global treaty related to the BEPS, the India apparently is negotiating with the OECD and particularly on the capital gain side. And that's the reason that you don't find anything related to international taxation, regarding that treaty in the budget. Probably it will come later once they agree, because at this stage, had India done something in the finance bill, it could have become their stand vis-a-vis, the OECD. The talks are still on. So probably because of that is my understanding. So, but you rightly said, lots of positive changes, lots of interesting, the pillars of the direct tax side. And let me go to the intervener side. Maybe, Mr. Sridhar would like to share his initial observations about it before we go deeper into the technicalities of various provisions. So, Mr. Sridhar, are you around? Yes, sir. Yes, sir. So you would like to say?
I was just wanting to, there are three things, which I had in my mind. One was the fact that, the larger issue of infrastructure with regard to roadways in the initial stage. It's one good thing is there in the speech that they are planning an outlay of more than 20,000 crores, which will be invested through means which will be decided by most probably, I think, by NHAI, and 25,000 kilometers of road in the coming years. I mean, which is perhaps a very, very great impetus to road transportation and faster movement of goods, in my opinion. That's a very nice thing. And then one more thing which I felt was very, very important in the financial attention is 400 Bharat Vande trains, which is of high-speed quality, which will be coming up. Right now, I think we have only 2 or 3, one to Varanasi and one that provides a great impetus to the infrastructure also. Now, coming to the direct and indirect tax, two things I only want maybe in the panel to perhaps respond to this. I would like to raise these as intervention points. One is, if you look at the amendment to section 49 of the GST, they brought in this concept of restrictions by posing a new clause in 49. Okay. Now, last year, there was this larger issue of this rule 86B, where so much percentage has to be paid in cash, and then the exceptions. There was huge discussion, then implementation from 1st January. Is this amendment only to plug the view of the industry and the trade at large? When they said, many consultants said, no, where is the statute amendment for that? So is that only the reason? Or there is the larger question, somebody like Mani should answer this, that this suddenly can it be used for normal problem if they have in January, February, March? Will that the council recommend now you please have 5%? Then it will become free for all. No, it shouldn't lose that seriousness with which it was intended. So that is the first question. Second question is, there is a very important direct tax amendment with regard to public policy in section 37, where even compounding fees paid will no more be held as a deduction. The larger aspect of compounding, there's done a lot of reporting of compounding in our years. Now, the whole idea of compounding is you get away from the prosecution and pay the amount. And that is coming through a sanction through the process of law. Now, one law, it's like saying, to keep one eye alive, you poke the other eye. So you keep it alive by one process. And at that same time say, no, I won't allow the deduction of the compounding fee paid. I agree if there is an offense under any other country laws or any country law in India. Now, I would like to give a small example. Even traffic offenses, you pay compounding fees. For example, you have a truck delivering goods of various suppliers. That truck is owned by one of the companies. Let us assume a company A that pays compounding fee for a traffic offense. In strict kind of interpretation, that is not allowed. Then 2 years ago, the larger aspect of this against medical professionals with regard to the larger issue of giving them perquisites or tips became a very big issue in India. Now, that is also intended to be covered by Section 37. Now, this public policy comment on that is perhaps required. And last but the point just recently referred, this is with regard to the repetitive appeals. It says, if you read the section as proposed, as it stands today this morning, it says the collegium is of the opinion. Shailendra, it's very, very important. Now, the collegium has been defined in the bill. Now, I can't recollect immediately. It says so many number of commissioners should be a part of that. My only point is here also this also be having some element of outside third-party representation where there is no bias. Now, because if the collegium is not of the opinion that this matter is pending, that the matter is over, then this whole repetitive avoidance once again will not find the acceptance of the collegium, because if it is once again going to be made of the departmental people.
Right.
I think these are the points which I would expect the panelists to.
I think, sir, on this point, fortunately we have Mr. Rajnish Kumar, who was instrumental in a lot of interesting changes during his time. And also he could give us the inside view how exactly it works within the income tax department, whether really, because what we are saying is nothing but akin to a call book system in a central excise, So this is what happening. You are going to put everything, defer everything means putting it in the call book, all the appeals. And whether it's really beneficial for the department and for the SSC both and for the economy as a whole, maybe Mr. Rajnish Kumar would like to give us some insight into this. Sir, are you around? Can you hear me, sir?
Sir, you're on mute. You can unmute yourself.
Sir, you are mute, sir.
Salandraji.
Yes, sir. Yes, sir. Yes, sir.
Good afternoon.
Good afternoon, sir.
I will have only the direct tax perspective, not the call book, etc.
Yes, sir. And Mr. Sridhar raised this very vital point. So maybe you could give us some insights on how it works. Because this provision was always there, sir, in income tax.
About repetitive appeal.
Right, sir.
No, repetitive appeal, it has been, the section was already there, 158 AA. Now they are repealing it and bringing a new one.
New one, right, sir.
As has been mentioned by Mr. Sridhar or somebody else, that the consent of the SSC has to be taken. Now the first issue would be whether the question of law SSC is same. Now it's very difficult to say that the question of law is identical in every case, other cases also. SSC will not take this chance because they will always, question of law also depends on facts involved in the particular case. So it's very difficult to bring out that the question of law is identical in other case. An option of the SSC also is a question. The earlier no SSC gave the consent that the same question is involved in my earlier years. Because they take chance that next bench may take a decision a view different than what was taken earlier. So this will not be very successful. I have very grave doubt about this. Now the very interesting point is about the updated return, and a feeling has gone around that the omission can be corrected by paying some taxes. Now a little background about this. Few years back, we had 2 years already available to the taxpayers to revise the return, covering the omission, etc., upward or downward, with no additional tax. Now, slowly and slowly, this period was curtailed from 2 years to 1 year, 1 year to now it is within the financial assessment year itself. Now they are saying that 2 more years we are giving you to amend this, provided you pay additional taxes. And that too, this omission has to be only upward, not downward. So we are not actually, some benefit which was taken away partly is being given back to the advantage of the government. That is not a very fair thing for the taxpayers. Secondly, it will
I think we lost him.
So can you hear us, sir? I think naturally, this very soon, sir, we will have 5G, sir. It was announced in the budget. We are developing that technology. I think, sir, this connectivity is gone. But anyway, I mean, that's a very important point. Maybe Mr. Gupta would like to give us some insight about it, what sir is suggesting, and Mr. Sridhar and Mr. Burman, of course, Mr. Mani is aware of this call book system, how it works. And there has been a very serious deterioration in the call book system. Unnecessarily the litigation is pending or maybe being initiated after a few years, after some decisions are taken, and etc. So whether the same thing is going to happen, the same fate awaits income tax department, particularly on this issue, or yes, sir.
The collegium is of the opinion, Shailendra, that also should be addressed. Collegium is of the opinion.
Sir, I mean, collegium, I understand, sir, in the DRP also there used to be a collegium, sir. In fact, how DRP has been functioning, all of us are very familiar with this, and even in CBIC side, sir, the group of a committee of chief commissioners and commissioners on variety of issues, even that system did not work, God knows. Let's hope that it works here, but, yes, sir, are you back, sir?
Yes, hello.
Yes, sir, please.
Now, this collegium concept, that is only to take a decision to file appeal or not file appeal. Hello, the collegium is not going to decide the issue.
Right, sir, correct.
So it was a brainwave of someone that the two commissioners or chief commissioners should sit together and then decide whether to file an appeal. That is a very, very, it has no meaning that way. Two persons saying that file appeal, it has all become mechanical in the office. But file comes, what is their appeal is being filed? Yes, okay, approved. Now, if person is confident, then one person can decide whether to file appeal or not appeal. Now, that is sadly missing. The responsibility is being thrown to 2-3 persons, and then they're all saying together that yes, file appeal. Now, this concept of collegium is of the opinion, as Mr. Sridhar says, it has not great impact. It is only to authorize a filing appeal or not filing appeal. Actually, the crux is that appeal should not be filed. They should take responsibility. That is not happening because of various reasons, vigilance fear and all this, or next promotion to the board, etc. comes into play. So nobody wants to take a risk, and they authorize. So even collegium system has not functioned that well.
Right.
These two persons in the ITT bench or the two persons in the High Court as judges, they decide whole things. But then in administrative domain, this is not happening the way it should have happened.
But to my mind, sir, the department will have to create a separate portal to keep track of this kind of appeals, sir. Otherwise, how will you keep track of, which case is actually, being decided by some High Court, Supreme Court, and something is pending in the call book and all that. So, machinery-wise, sir, this is going to be a Himalayan challenge for the income tax department.
What is very interesting that they will have to go to the tribunal or the High Court right now. Within these 60 days or 120 days, they will have to go and say that, look here, we have an appeal, but I'm not filing because identical issue is pending before you in that case. So once you decide and it is it's not in conformity with the decision which is before me today, then we will come to you.
Right.
So there will be now more work, paperwork, and plus keeping a track of these things. So it will be a great thing.
So in a nutshell, this is not going to actually help, evade litigation, to some or any extent for that matter. But sir, we are also talking about updated returns. Something interesting you wanted to say, sir.
Updated return, you see, this benefit was available to the SSE 3-4 years back, that they could file revised return up to 2 years from the end of the assessment year without paying any additional tax. Now that was slowly curtailed to 1 year, and then now
the assessment year, sir, yes.
Now you are giving a benefit back to the SSE only for filing upward returns, not the lower return, and then pay additional tax of 25% additional tax or 50% additional tax. So something which SSE already had has been taken away and then being given back with penalty sort of thing. Now this is also not gelling with the fact that omission you can't say is an evasion. Penalty, additional tax is a penalty in the financial terms. Now you are taking penalty and admitting that this is an omission on the part of the SSE. He is not evading tax. that there has been some genuine omission and then is trying to correct that. Now you are charging a heavy amount out of that. Is not appears to be fair
Right,
from
sir.
taxpayer point of view.
So let me
Plus,
go back to Mr. Sir.
Plus, it is not available to the taxpayers whose cases have been selected for scrutiny or assessments have been made.
Lots
or
of
surveys
exclusions are there, sir. Yes.
So very limited, very small segment of the person will be there who later on realizes that something has been omitted, so they'll go back and file the return. So not have great impact.
Right, I get the point. So let me go back to Mr. Gupta. Mr. Gupta, I mean, what sir is suggesting and what I am able to understand, that if I am an honest taxpayer, and if I go back to the department, say after 18 months, and say that, look, it was a case of oversight, I missed reporting this and putting it in my return, etc. I am willing to pay tax. And the department should immediately hold me by my collars and saying that, okay, 18 months, okay, fine, pay 50% now extra. I mean, do you think this is going to work? Or this is an incentive or disincentive? I mean, common sense, I'm just talking about, as an individual taxpayer.
Right. No, I think it can cut both ways. And I think as Rajniji did mention that until assessment year 16-17, there was a period of 1 year from the end of the relevant assessment year where you could file a revised return, or if you've not filed a return, you could even file a return without any additional tax. Of course, you had to pay the due interest. And then that was withdrawn and slowly, steadily curtailed. And now you could have filed your revised return or the return by the end of the year. And now you are given the same benefit, a slightly more extended benefit. And so it's you are given a little bit rope. But to get that, you have to pay 25% or 50%. So it may sound slightly unfair, but I think it depends upon the facts of each individual. Some may view it as a benefit who may have not filed the return appropriately. And I think if they detect it later on, and rather than save from penalty, they may think it's a good way to pay 50% or 25% and not get subject to penalty or reassessment.
Okay. So, Mr. Sridhar, I believe you have some opinion on this.
No, I think I would agree with whatever they are saying. There is no such specific disagreement. But I wanted Mr. Gupta to touch upon this concept of the collegium's opinion. And this, as Mr. Rajneesh correctly said, this collegium consisting of 2 commissioners. That looks very strange to us. Once again, right. We are back to that collegium situation.
Right. And I think it is going to create a lot of administrative issues. So as I think Mr. Kumar did mention, today, if the department has to file an appeal, in most of the cases, either the appeal is filed late or they are filed on the last day. Now, if they have to file this appeal on the 60th day or the 120th day, and also take the approval of the taxpayer before that, I think they have to start the work as soon as they get the order. Now, who is going to refer the matter to the collegium? When is the collegium going to know about that? When they get to know, when are they going to discuss, when they communicate to the officer, when they will reach to the taxpayer? I think the whole process will need to be so disciplined that they are able to take this decision within a period of 59 days or 119 days, so that at least on the 60th day or the 120th day, they are able to communicate to the tribunal or the high court that they will not want to file an appeal. And there could be taxpayers who may have a number of issues in an appeal. And they may say, okay, only one issue is common. So what happens? Do I don't file an appeal on one issue and I file on another? Or right. I have to then file an appeal because those other 2 issues are not covered. So there will be a lot of practical aspects and administrative aspects that will need to be borne in mind. And that's what I think the success of it will depend upon how this is implemented.
Right. So let me go back to Mr. Mani. Sir, you talked about canon.
Sorry, Shailendra. What about their views on Section 37 amendment? That was also
okay.
Sure.
Section 30.
Yeah, so maybe I'll spend a couple of minutes. So explanation 3, which is added to Section 37. So there was already one provision which says that if it is in offense under any law, then it is not deductible. Now, there were a couple of amendments which have been made. One is that offense was not specified in India, outside India. So that is one amendment which they have made because some judgments have taken review, doesn't cover outside India. But the other more important one is vis-a-vis the medical profession or the pharma companies. And if you see the whole explanation which is given in the memorandum covering 4 or 5 pages on that, where they've gone through the whole history, the circular which was issued by the medical fraternity and so on. And therefore, I think what they are trying to do is that wherever a benefit is being given, which is not in compliance with the ethics or the rules, that they want to get covered as if it's not in compliance with law. Now, while the background which has been given is in the context of the IMA or the medical, whether that will have any bearing on any other profession in that sense or larger impact, I think one will need to see that. But it is interesting to see the way it has been explained through the whole history of 4 or 5 pages in the memorandum, taking out the different judgments which have been given. It's very interesting to see that. But yes, it's going to have a significant impact as such.
Yes,
and just one more thing, these 2 changes all have been made clarificatory. Although the section says it is effective from 1st April 22, I think they are leaving it to the courts to decide wherever the matter is pending, how the courts will want to take that. I think that will be left to the courts to decide.
Right. And very interesting thing, that, probably Mr. Sridhar will recall, or Mr. Mani will recall, or Mr. Sant Verma will recall that I see particularly the finance bill giving reference to a particular jurisprudence being, actually groomed by ITAT. That is very interesting. Because most of the time they will refer to Supreme Court decision or High Court decision, but not ITAT. But this time I think this is that a special bench decision, where they have made this reference, and they are also saying that, it's a substantive part of law being groomed, and that is something where probably it will have implication for some of those professions, little which goes for codification of the ethics and behavior and conduct and all that. Maybe chartered accountant could be one, perhaps, and maybe the lawyers could be another. If Bar Council
Shailendra, the larger issue in these kind of provisions is, without wasting time on this one single provision, because the other things you want to discuss, let us assume that you're fighting a compounding case. Okay, to get a compounding done in a high court, let us assume the old VAT matter, which is why we have somebody like Mani here. So old matter, the compounding is still pending in the high court for a prosecution. Now you succeed in the compounding. That compounding particular amount paid to the department is disallowed as per the new provision. Let us say you spent about 15 lakhs of advocate fees for the person who fought the compounding in the Bombay High Court or in the Kerala High Court. Now that is being allowed under Section 37. Now there is a dichotomy there.
No, because they are very clear that they don't want to disappoint lawyers. So that is, Mr. Mani would like to comment on this. Yes, sir.
Yeah, so Shailendra, I think we just have 5 minutes or so left. So I just wanted to touch upon one particular aspect which Mr. Verma had also mentioned, because we discussed canon in a bit of detail in terms of what has happened. But there are some GST changes, and one of them Mr. Verma alluded to. So that is something which, typically has made a lot of taxpayers uncertain on what they need to do. So as a background, what has happened in the budget is Section 41 of CGST Act has been amended. And the amendment says that if a taxpayer takes credit, but subsequently realizes that the supplier has not paid the tax, the taxpayer is required to reverse the credit with the interest. And at a later date, when the taxpayer realizes that the supplier now has made good the payment, she can again take credit back. So this is what is Section 41 CGST amendment. Here there are 2 aspects which came to my notice. The first is the fact that in 2021 there was a writ petition filed by this company called Beethel. So Beethel filed a writ petition in the Madras High Court, and at that point of time the Madras High Court had said that if a supplier commits a default, the recourse to the revenue authorities is first to the supplier to make good the default, and if that does not succeed, then the revenue authorities can come back to the taxpayer and ask the taxpayer to reverse. Now, this change that they have made in Section 41 effectively completely nullifies what the Madras High Court said in case of Beethel. It does not make sense at all. And if you go a little beyond Beethel, in 2018, even Supreme Court said something similar in case of a matter involving Arise Industries. And Beethel was following the ratio given by the Supreme Court in Arise. So this completely nullifies that, because here what is being said is, if the vendor has committed a default in payment of the tax, the buyer of those goods or services has to now make a reversal with the interest. What is left unanswered over here, in addition to the fact that this has overruled the decision of the Madras High Court, Fortunately, the law now says, Section 41 Amendment now says that at a later point of time, when the supplier of the goods has made good the tax payment, the buyer is now permitted to again reclaim the credit. They have said that. Now, the catch over here is like this. The time limit for taking a credit is 30th November of the next financial year. This was 30th September, which has now been increased to 30th November. Now, if this goes beyond 30th November, what exactly happens? So, if the tax payment made by the supplier is beyond 30th November, therefore, would an exception be carved out? The law is silent on that. But this is something which I think all taxpayers will need to watch very cautiously, because GST from the beginning has made it essential for every dealer to be responsible for the action of their vendors also. This is now being taken further and further and further. The intention clearly is to prevent any kind of a systemic leakage in the whole GST value chain, which is understood and which is appreciated. But the fact remains that there are a lot of vendors who will be non-compliant for every corporate. It is impossible for a corporate to monitor the compliance of all its vendors at any given point of time. And to say that they will be penalized with not only the reversal and also the interest would cause a bit of distress to many corporates having large vendor base.
True, sir. I agree with you, sir. That's a big challenge, but
And
I think
Mr. Mani's views on section 49, subsection 12 amendment.
yeah, 4912, yes.
Mr. Sridhar, we will just come to that in a minute, because I think we have run out of time. So I can see that it's 5 o'clock.
But I think we can get it extended unless, of course, the panel is of the different view.
Yeah, we have, sir, 15 more minutes to go, so there is no problem. I mean, we can touch some of those issues, in case some other amendments you would like to talk about in GST or maybe the custom side, or maybe Mr. Sant would like to touch upon a couple of issues. So we have, and then we will go for the questions, sir. From the attendees, we will have a few questions. Naturally, I mean, we are inviting that, so they can start sending us that. And yes, so yes, I think that what Mr. Mani said, the spirit is the same thing, from the government side, that they are the sovereign. They have given you the option. They have been telling you right from the beginning that you better filter your suppliers, and if the suppliers are verified and they are filing their the GSTR1 regularly, fine. Now they have linked it that unless you file GSTR1, you will not be allowed to file GSTR3B. All these things, that's because after having defaulted or failed in that, in a systemic way, right in the beginning, if you remember this GSTR1, 2, and 3, after that, probably, this was the solution. If you look at some of those omissions in the CGST Act, probably you will find that, the new returns are also junk now. They decided to put in the dustbin, isn't it? Yeah, Mr. Sant, you wanted to add something?
No, and now, Shailendra, I think this point, in my view, government is stretching it too far. And I think we have observed this over a decade now. And as I mentioned, this was there in the Central Excise Act also. There used to be a term called effective steps. The buyer should or recipient should ensure that they have taken effective steps. Effective steps are also defined, but it never went to this extent that you must make sure that the supplier is paid. I think this is, in my view, this is going too far. We should not go there. Now, since there is so much of control digitally on every taxpayer, they file return. If they don't file, government comes to know about it. If they don't file 3B and don't pay by 20th, they come to know about it. So you have complete authority and jurisdiction over supplier. Go and make use of those sections, get tax collected from them. I think I find it very, in a way, unacceptable that this onus should be cast on the recipient. I think this is absolutely not required. And I think the other point which Sridhar was mentioning, I don't recall the exact clause, etc. But maybe Sridhar, you're trying to highlight the point where they're saying they'll put restriction on the percentage of usage of credit. Now that's also is going. If you ask me very objectively, it again goes against the overall principles, of the GST. And see, credit is a kitty. You have already earned it. Somebody has paid it. Government of India got the tax. Now, if you further put filters there, that no, we will put further buckets and constraints and restrictions for you how to use it and how much to use it. I don't think this is going in the right direction.
Yeah, I'm not pretty sure that whether it's going to be omnibus provision, but probably their intent is that they have not come out. But Mr. Sridhar, you were telling me about the magnitude of that fake ITC fraud or something. That he was.
But that of course is perhaps biased. Maybe I think we should hear what the practice people feel more than the industry feels from Mr. Mani, since you have got 15 minutes time. So you can definitely ask him what he has to say on his views on 4912.
Yeah, so Mr. Sridhar, the way I look at it is 4912, the way it's been enacted now is merely an empowerment which has been provided to talk of certain categories of taxpayers on whom restrictions may be imposed. It's not an umbrella provision applicable to everybody. So to that extent, compliant taxpayers need not be worried about 4912 being put to mischief. I don't think that will happen, and that is not the intention. And we have to read 4912 together with 4910. So the preceding amendment, which is 4910, talks of transfer of ITC between different locations of the same registered person, between different, where it is a distinct person, which is a very great measure. So if the same taxpayer has got two separate states and is having surplus credit in one state and has got a tax payment in another state, the earlier procedure was that he would have to go and claim a refund.
Right.
So now they have introduced 4910. In that same light, they have come up with 4912. And all that they have done in 4912 is to reserve the power to prescribe the proportion of output tax liability which can be paid through electronic cash ledger. Now, this will be used, to my mind, very selectively in case of taxpayers who are, let us say, non-compliant in filing returns or paying their tax in time, or where they detect what is referred to as round stripping, where a series of entities in the same group issue invoices to each other and they start taking credit. So my sense, Mr. Sridhar, would be we don't need to be worried too much about 4912 in case of compliant assessees.
Right.
I'm certainly relieved to hear this, Mani. Thanks.
I agree with Mr. Mani. In fact, what he rightly said, sir. I think you need not industry need not worry about it, because the magnitude of ITC fraud is just humongous, sir. I will not talk about it because government has not made
those news articles. We keep getting those news articles, and I think, Mani, this kind of provision of putting restriction on the dealer or putting a cap, etc., was already there, and now in some other form. It was there under central excise also earlier, which is so if somebody is defaulting, of course, you take care of them. That's okay.
Yeah, and the operative part over here, Mr. Verma, is on such registered person or persons as may be notified.
Understood.
Which means for a particular registered person, if there is a restriction which is to be put, that has to be notified. So the operative part is such registered person to be notified. Understood. And therefore, possibly we don't need to worry too much about, it's what I would say. But again, to come back, we have to continue being worried about the category of vendors that we are dealing with, because they are posing a systemic risk. And possibly this is the time where many organizations will start looking at technology tools which help them detect vendors who are non-compliant, will help them with their vendor quality rating and stuff like that. So this is the time where all organizations should be doing something like a broad level procurement verification, a broad level vendor quality mapping. And that in the past has always been done from the vendors, timeliness of the product, the quality of the product, the delivery of the product, and the pricing. Now in that matrix, there now needs to be a tax factor also attached to it, a tax score of the vendor which has to be provided. So possibly the need of the hour is to go for a vendor quality rating from a GST perspective.
Absolutely correct, sir. So, let me go to Mr. Gupta. There are a lot of interesting changes with, with respect to income tax side. All of us are aware that, particularly after this Section 9, the amendment being reversed and then the relief being granted to many of the investors in India with respect to the transfer of assets. This retro amendment, of course, was orchestrated by the government that it will not be resorted to unless it is, under some duress or it's so necessary mandatory. But in this budget, I find that Section 14A, for that matter, even this Bombay High Court decision being superseded. The health and education says, I think I have not counted, but I think quite a few of them are retrospective in nature. Because every time, I have also noticed interesting thing, even Honorable Finance Minister saying that it is being clarified. That basically means you are indicating it in retrospective. You're not saying that it is being inserted, amended so that it will have the prospective effect. So, I mean, this is something, yeah, please.
So there are three of them which are retrospective. The first one, of course, we referred to earlier in the context. The 14A one is retrospective, but it says it is amendment is from 1st April 22, but they say it is clarificatory. Now they will be leaving it to the courts to decide because their intention is to make it clarificatory, but they're not making it retrospective from assessment of 2007-8. They are saying the amendment will apply from 2022, but it is clarificatory. The other one is vis-a-vis the explanation 3 to section 37, which we were discussing. I think the point which Mr. Sridhar was trying to say is that if a law is giving me an option to compound an offense, can you really then say it's a violation of a law in itself? I think that's the point which Mr. Sridhar is trying to say. If you're giving me an option to compound, then why are you disallowing that as an expenditure? It is like a CSR expenditure. You are forcing me to have an expenditure, but you're not allowing me that as a deduction. Now, a few other changes I think which are relevant. One, of course, in the context of the virtual digital asset, there's a flat rate of 30% which will apply, no set off of losses in that sense, and the gift of that to a relative will also become taxable. Now, that's slightly, I think, in contradistinction. If you say even if a speculative income or a loss, you see you have a carry forward of loss for 4 years, but in this case, you don't have any carry forward of loss. In the case of capital gains, if you were to compare, then at least any expenditure incurred in connection with the transfer is deductible. In this case, nothing is deductible. So those are the issues so far as the VDA or the virtual digital asset is concerned. Then, of course, there is this changes surrounding bonus stripping. Earlier, it was not applicable to securities. It was only applicable to units. Now, it has also been applicable to shares and securities. And also vis-a-vis units, it is now also applicable to units of AF, units of REITs and InvITs. So that's a big change in so far as the bonus stripping is concerned and the disallowance of loss. Of course, it will get added back to the cost, but that's a significant change. On the assessment side or the reassessment side, I think they have revamped again slightly the reassessment provisions. But I think they have also added 2 more categories where the time period can extend it to 10 years. Earlier, it was only if the income was represented by an asset. Now, of course, it is also represented by any expenditure or if there are any entries in the books where it is more than 50 lakh. Now, that's slightly worrisome because earlier you had a limit of 4 years and 6 years. Then you brought it down to 3 years and also 10 years, but 10 years was very limited. Now you're expanding the scope of 10 years in that sense. So in hindsight, you are going back to a larger tax regime, larger time period to do the reassessment. And then, of course, you have this issue surrounding the tax holidays. I think that is welcome. Both the tax holidays have been extended by 1 year, the startups and the manufacturing. And then you have the dividend by Indian company receiving from foreign company. That, of course, now it's being sunset, in the sense being closed from April 22 financial year onwards. So any dividend which has to be brought in can be brought by 31st March 22 to get the 15% benefit. So right. I think those are the few changes. And one important one which we like to highlight, which is also there in the question, is on this TDS on the benefit of perquisite. Now, we had this provision under 28(4) where any benefit of perquisite, whether convertible into money or not, is taxable. I think the issue is there is no tracking mechanism as to how is that offered to tax in the hands of the recipient or not. And I think what the government is now trying to do is impose a TDS of 10% on that benefit or perquisite. So, for example, if you have a company and organizing a dealers conference, hopefully that dealers conference by itself should not be treated as a benefit or a perquisite. But if at all a dealer does good and is given a reward for that, but by any ways whatsoever, maybe a product or any way, whether that benefit now will get taxed at 10%, how are you going to determine the value of that benefit? The compliance mechanism of that and so on. So I think that this is one area I think which is going to create a lot of issues surrounding subject to litigation.
I agree, Mr. Gupta. Every FMCG company takes their dealers abroad most of the time.
Right.
What happens to those foreign trips? You get treated as perks, and then you force them to pay tax.
I think one will need to
you do a TDS and it becomes their income. I think this is, in my views, from the industry perspective, this also seems unnecessary.
Right, absolutely. I think if you recollect, we had this disallowance under 37(3A, 3B many years back, which were discontinued because it was not required. and now you're bringing up in a different way of TDS at 10%.
I think Gupta will agree that this is nothing but the fringe benefit tax, which were discontinued,
That's right.
Basically,
That's right.
again, they are bringing, the tax and withholding tax on perquisites,
See, these are all your business associates, your dealers, it's everybody a business associate. I think it becomes a big irritant,
Right. I think the only thing is it should not apply vis-a-vis employees. The question is whether employees already covered under 192, so they should not apply to employees. 194R will be only vis-a-vis those carrying on business in that sense. But it will be a provision which is create a lot of litigation.
Yes, and I'm not pretty sure that how much revenue government or income tax department will garner by taxing perquisite like this.
This is
unless they are going to open the floodgate, of litigation. Yeah, you're right.
Every budget you get 2-3 irritants, so this is going to be one of them.
Right.
Somebody's brainchild.
Let me go back to Mr. Mani. In fact, Mr. Mani, there is one very interesting amendment. Probably Mr. Sridhar might have noticed it in Section 135A of Customs Act. What they have inserted is 135AA. And that, if you have that bill with you, or maybe this memo or something, maybe you could take a look at it. This is about the protection of data. If anybody publishes an exporter or importer's data related to classification of the product and valuation, right? Then, and if a complaint is made, then there is going to be somebody is going to be sentenced to 6 months jail and 50,000 rupees penalty. And it is so, I don't know, I have read 5 times, and every time I find that it is very, very loosely drafted. And it might be extended tomorrow that CBIC person is unhappy and they will say that, okay, let's call this Economic Times fellow whoever has published this news, based on some input from some consultant or somewhere. And then in the name of protection of data, perhaps, I don't know, but their intention is to perhaps provide this protection to the industry whose data, probably the secret data, confidential data, not to be leaked or shared or something. Yeah, please.
Please go ahead.
I think before money comes in, I only know this, that industry has been complaining about this for long.
Right. Yeah, of course, naturally, it is in response to industry, and intent is good, laudable.
Over to you, Mani.
Yes.
Okay. So, Shailendraji, the way I look at it is in terms of the change that has been made in 135AA. This is certainly a very welcome change, because when people go for, let us say, the special valuation branch, they submit a lot of data in respect of their imports, the price, the country from which it is imported, their overseas suppliers. Enormous amount of data is provided, and that data has to remain, confidential. My take on that broadly would be that the fine that has been prescribed, it says 6 months or fine up to 50K or with both.
Both, right.
So 50K to my mind is too less a fine for data protection related cases, because the damage caused to an organization would be, gigantic. The other catch that I saw over here is, together with 135AA, they also have made an amendment to section 137(1). And in terms of the 137(1) amendment, in order for a court to take note of a violation of 135AA, this has to have the previous sanction of Principal Commissioner of Customs. So if I am the aggrieved person in this case,
right,
and I would like to take the customs authorities to task to say that, look, why did my data get leaked? I have to bear in mind that can happen, and only happen, with the previous sanction provided by the Principal Commissioner of Customs, who in fact may be in the chain of command for the official who has violated the data privacy. So 137(1) in some ways negates 135AA.
I get the point, sir. But my concern was that this may be extended tomorrow by aggrieved custom officer to journalists also. And I'm real worried, a little worried about Mr. Sridhar now.
Yeah, you raised the point. Yeah.
Yes, sir. I've raised the point because they have used the term expression publish, and publish means reproduction, and then nothing else. I think, I don't remember the exact wording, but I read it, and at the first glance yesterday, and I said that, okay, I have to go back to this section again. When I realized that Mr. Mani is with me, so I don't have to read it again. And that is how I thought that, let me capitalize on this opportunity. So
the language used, Shailendra ji, is what I recollect is publish unless it is required in accordance with law.
yes, correct.
Right? So that is the language that they have used.
That is the language.
Now, if you say publish unless required in accordance with law, that is very, very open-ended.
Very, very open-ended, sir. Absolutely. Because, I tell you, sir, as a journalist, I can tell you, as a print journalist also, the good number of inputs which we used to receive as a journalist in Economic Times, or most of the journalists will receive, that somebody is saying that, there is a violation, the custom is investigating, and this is the classification dispute, and this is the valuation, they are importing it from Netherlands, and they are manipulating and suppressing and undervaluing it, etc., etc., etc. So journalists will publish all the data in the report that this is the allegation. So tomorrow this section may be extended, because this is again inclusive, the definition they have given, that it includes reproducing. So again, inclusive expression they have used, and that can be misused. Yes.
And
yes,
I'm saying, sharing the one piece of advice: find some good lawyer friends.
No, I can handle myself, because I'm being a lawyer, I will handle it. So there is no issue, but I am worried about,
No, for my friend Sridhar, I'm saying find some good lawyer friends for my friend Sridhar.
Oh, okay. I will defend him. Yes. So the point is that these are some of the changes, where I find in the finance bill, historically, maybe Mr. Sridhar is the right person to tell us, maybe he represents continuity in the deterioration in the drafting of the bill. The finance bill, various provisions, either direct tax side and also indirect tax side. And maybe Mr. Rajesh Kumar is there because he was the person who was, as Commissioner Judicial, he apparently, he automated the entire data after Justice Kapadia apparently gave some mandate. And he insisted that it has to be done immediately, and that is how all the SLPs, etc., of direct tax side, civility side was automated. And no, sir, in fact, maybe you could give us some idea about it, sir.
Yes, Shailendra ji, we had to do this under the threat of punishment from the Supreme Court, and we could digitize all the pending appeals with the Supreme Court, as also the process of bringing the proposal from the field formation and filing it in the Supreme Court. And now the Income Tax Department has very good control over it. So we are able to track everything. But the current proposition that has been brought out in the current budget will require something more to be done. So because it will be now, one appeal will have two tiers. One is that you file a application in the court today, that we may come to you if our decision in this case is in our favor. So that will pose burden to the existing setup. But now it can be done. It's not a big deal. So that part is over. But the challenge would be the SSC's consent to agree that the appeal is, my appeal is also covered by the appeal pending before the court today. So that is hardly will come. Yes.
So sir, I think we have to touch various aspects. Of course, I mean, from direct tax side, Mr. Gupta virtually touched everything. He did not leave out anything. And so Mani had touched, the substantive part of this, the retrospective amendment to canon, the defining this section 2, what is proper officer. And then, actually the zombie of DRI will be back in action now. All those cases will be sort of revived. So lots of litigation. Yes, it will resume again. And so it's a time now to get some questions in case, from the audience side, we have a few questions we would like to take because we have already gone beyond the boundaries of the deadline, in fact, what we had said initially. So maybe I would request the audience to share a few questions quickly. Okay, so there is a question here. So I mean, maybe the honorable panelists would also like to take a look at this. They can also read that. In fact, we have one basically related to this section 50. The amendment is proposed in section 50 with regard to reduction. in the cost of acquisition of goodwill due to depreciation claimed in earlier years will be treated as transfer. Will there be any additional tax consequence? I think Mr. Gupta can handle this. Yeah.
Right. So I think the reason for the amendment as has been provided in the memorandum is only a consequential amendment because of the changes made last year. But I think the use of the phrase transfer is creating some sort of an ambiguity to mean that whether that will result in any taxable event. I don't think so that there should be any tax consequential tax implication as an adverse manner, but I think there is some ambiguity on that which will arise.
Okay, that's great. Then there is a very interesting here. Okay, as the previous deadline was September return for 3 things: issue of credit notes, last date for ever ITC amendment. Now the deadline is 30th November. Can we say it is October return, which is to be filed in November, or a view can be taken as the November return with the last return? Yes, sir.
So we'll have to wait and watch, for that. Now, my prima facie view would be that it is a November return, but we'll have to wait and see if it is a November return or the October return. Possibly over the next week or so, we'll get some clarity on that.
Yeah, after in any case, they will issue the notification. So in notification, we'll get to know that. So that will come after this finance bill stands enacted, in the next session of the House. And they are meeting sometime in March. So before 31st March, it will be enacted and then they will issue the notification. So by 31st March, we'll get to know about it. So then, sir, I think then it's a happy ending, I guess, because, most of our attendees are well informed.
There are 2 questions in the Q&A chat box, Shailendraji.
Q&A.
One is on 194R. One is on 194R.
Oh, right, sir. Yes, sir. Got it, sir. Yes, sir. So can you please clarify the implication of section 94R? This is interesting. Perquisite is given by the implied to an imply and is already covered under 192. So secondly, benefit is a vague term and can live wider net. So again, what Mr. Gupta talked about, this particular amendment, this perquisite being taxed. So maybe he would like to answer it.
Right. So as I mentioned earlier, I think 194R should apply only vis-a-vis dealers, not vis-a-vis employees, because employees tax withholding is only covered under 192. But yes, I do agree that benefits or perquisite will be a vague term. How that will be quantified, I think will be an issue, and the whole manner in which it will get implemented will certainly be a challenge, and it is going to be a subject matter of great litigation.
The board will certainly come out with, some circular or all those details. So then we'll get to know more about it. Yes.
Hopefully they will.
Hopefully they will. So certainly they will. There will be some instructions, here at least. At least,
Mr. Verma has a question, I think.
One quick point. I think just a follow-up, Mr. Gupta, for you on that, the question which was on section 50. I think as a sequel to the amendment which happened last year. So are they trying to conceive or cover a situation where, so once you create goodwill, assume that you acquire business, you pay and you create a goodwill. Of course, you don't get deduction of that. That is the amendment which addressed last year.
Right.
Now, after that, you have a goodwill sitting in your books now. It's an asset which you have paid for. Few years down the line, assume that you also transfer business. Is that the situation they are trying to cover now?
Or you can look at a situation where I have other intangibles as well, which fall in the same block. And if I'm doing transfer of that, whether that will have a bearing on this. So there will be a couple of situations where that will apply. But vis-a-vis goodwill, I don't foresee that there should be any adverse consequences per se, because in the amendment last year already you were taken away the benefit in that sense. So this appears to be only a consequential. This by itself should not have any adverse implication in that sense.
Understood. Clear.
it will not have something, but as you rightly pointed out, it will cover that.
The use of the word transfer is only creating
Yes, they will.
Just wanted to understand what they are trying to conceive now.
Correct.
Right.
Yeah, thank you.
So I think, how do we understand and assess green tax system? Okay, green tax system. So I think, lots of interesting steps have been taken this time, by the government, for green tax system. Again, are you referring to carbon tax perhaps, or, maybe, a lot of new tax system has to be developed to, make the existing tax system a little more greener. So probably maybe this is a futuristic topic. Maybe we will touch that green tax in future, because, the carbon tax is the only one which is being talked about, but the carbon pricing has become a contentious issue. So that is why this green tax is something not for the developing country, or particularly for a country like India immediately. because in any case, we are following the polluters pay principle. So naturally, we will see that later. So on this note, sir, I think let me thank all the panelists and both the interveners for making it very, very stimulating, very, very insightful, very, very interesting, a churning bowl of thoughts and ideas and interpretations and very practical solutions for some of those ticklish provisions in the finance bill. And I'm pretty sure the attendees must be a little better enchanted and delighted and little more, they must be carrying back something from us, today, because whatever we could give, we have given them. And I'm pretty sure that please look forward to more webinars from our side. And I look forward to having, Mr. Gupta and Mr. Mani, both of them, and probably more of them from Deloitte in coming webinars. So thank you, and Santji, and of course Mr. Rajesh Kumar, and
Thank you so much.
My guru, Mr. Sridhar. Thank you, sir, to everybody, and it was pleasant having all of you. Thank you, sir. Thank you.